Global shares had another weak day of trading overnight. The biggest concern for markets overnight came out of the US Federal Reserve that announced that they see a little bit of weak economic growth for the US, mainly because of offshore developments coming out of Europe. They have reiterated their stance that they'll keep the Fed funds rate low at 0.25% for an extended period of time. On Thursday, we are expecting to see New Zealand's gross domestic product, or effectively our economic growth, expand by 0.5% over the past quarter. We are expecting to see the recovery a little bit more broad-based as opposed to being fairly patchy as we've seen over the past 12 months. On Wednesday, we did see our current account figures show that exports have been fairly strong over the past quarter, while imports remain subdued as they have been right through the recession. The current account effectively shows what we earn as a country versus what we spend, and this was down to the lowest level in 20 years. From here, we are expecting to see a deterioration in the current account as imports come back on board, and also due to the high debt that we owe other countries and higher debt servicing costs. The past 6 months have been pretty good for New Zealand's logging industry. April 2010 saw a record month for log exports coming out of New Zealand. Changes in taxes from Russian logs into China has changed the trade, especially with the Chinese, and New Zealand has been able to pick up the slack on this market. Traditional markets like Japan have also been pretty good, while India is certainly emerging as a good market prospect for New Zealand. Higher international prices has meant that we've seen higher supply coming from New Zealand, especially down to the port. While the international market does seem to be absorbing this higher production, only time will tell whether we are able to see further price increases from current levels.